A room in Moscow. The 17th of November, 1995. On the block, 38% of Norilsk nickel. The metals combine above the Arctic Circle. The winning bid is $170.1 million. The bank running the auction is organised Bank. The bank winning the auction is organised Bank. You were told this was an auction. It was a handover, and the paperwork says so. 18 months later, that same company books $1.6 billion of revenue in half a year. Between the 3rd of November and the 28th of December, 1995, the Russian state put controlling blocks of its largest companies up for collateral auction. Oil, nickel, steel, roughly 12 lots in 8 weeks. The economist Daniel Treisman, reconstructing the program for the National Bureau of Economic Research, puts the total the state raised at around $800 million. $800 million. That is the whole program. For that money, the state handed over the block that controlled Yukos, and within 2 years Yukos was trading at $9 billion. So there are two questions here, and they are not the same question. The first one is mechanical. How does a government legally sell its best companies to the men who are running the sale? That has an answer, and it is written down, signed, and dated. The second question is the one that stays open until the end of this video. Why do the men running the country want to lose those companies? A state that is broke does not usually give away the only assets it has left. This one did it on purpose, in public with a decree. By the end, you will know exactly what it bought with them. Start with the state, because the state is the desperate party here, not the banks. 1995, consumer prices in Russia rise by 197% in a single year on World Bank figures. The government cannot collect the taxes it is owed. It cannot print because printing is what produced that number. And it has a presidential election coming in June of the following year. So the men in the finance ministry need cash this quarter from somebody who has it. In Russia in 1995, the people who have it are the banks that handle the state's own accounts. On the 30th of March, a banker walks into a cabinet meeting chaired by the Prime Minister, Viktor Chernomyrdin, and makes an offer on behalf of a group of them. Now here is the design, and you have to follow it closely because everything that happens afterwards is inside it. The state does not sell anything. Selling is politically impossible. The parliament would block it and the public would riot. Instead, the state borrows. The banks lend cash to the government. As security, the government pledges its controlling shareholdings in the biggest companies it owns. If the state repays the loan, it gets the shares back. If the state does not repay, the creditor is entitled to sell the collateral and keep what is owed. On the 31st of August, 1995, President Yeltsin signs Decree number 889. On the transfer, in 1995, of federally held shares as collateral. It is 2 pages of procedure. Nothing in it is hidden. It is published, numbered, archived, and you can read it today. And that is the first thing to understand about this story. There is no smoking gun because nobody bothered to hide the gun. It was in the state register. But there is one detail in the design that nobody in that cabinet room seems to have said out loud. The creditor who is owed the money is also the party that organizes the auction of the collateral. He writes the rules of the sale. He sets the deposit. He decides who qualifies. And nothing anywhere says he cannot bid. The banker in that cabinet room is Vladimir Potanin. He runs organised Bank, one of the institutions that keeps state money on deposit. He is in his mid-30s. He is not, in the spring of 1995, a household name anywhere outside Moscow finance. What he proposes, according to the contemporary report in Commercet, is about $2 billion in loans from a consortium of banks in exchange for management of the state stakes. Hold on to that number, because it is the first thing in this story that does not survive contact with reality. $2 billion is the offer. The program, when it is finished, will raise around $800 million. Nobody recorded what Potanin was thinking that morning. This is not a story where we have to guess at motives, because the men involved will eventually say the quiet part into a newspaper. What we have from the 30th of March is what he said which is that the state has assets it cannot manage and the banks have cash it needs. Both halves of that sentence were true. That is what made it work. From his signature on the decree to the last auction is under 4 months. Watch what has to be solved in order. First, the legal cover, and that is done. Decree 889 exists. Second, the lots. The state does not pledge everything. It pledges the specific companies that print cash, oil out of Siberia, nickel out of the Arctic, steel out of Lipetsk. Third, and this is the part that takes real work, the auctions themselves. Early November, Neft, one of the largest oil producers in the country, roughly 40% of it. The winner is the pension fund of Neft. Read that again. The company is bought by its own pension fund. Sources disagree about the exact day of that auction, which tells you something about how carefully it was watched at the time. The 17th of November, Norilsk nickel, 38%, $170.1 million to ONXIM Bank, the bank that organized it. Late November, Metchel, the steel group, 15%, about $13 million. The 7th of December is a busy day. Lukoil, 5%. The contemporary reporting in Kommersant and the Moscow Times puts that bid at $35,010,000. You'll find a much larger figure repeated online, $141 million. It does not appear in either primary report, and I'm not going to use a number I cannot stand behind. The same day, Novolipetsk Steel, about 14.9%, $31 million. The 8th of December, Yukos. This is the big one. 45% of the company goes for a $159 million loan, with a further $150 million on an investment tender. Call it $309 million for 78% of what will shortly be one of the largest oil companies on Earth. The winning entity is a company called Laguna, created for the purpose, standing in for the Minitep Bank of Mikhail Khodorkovsky. And Minitep organized that auction. The 28th of December, 3 days before the year ends. Sibneft, 51%, about $100 million. So, 8 weeks, 12 lots, 300 million here, 170 there, and the state's industrial core has changed hands. Every step of it published in the newspapers as it happened. Nobody was hiding. And still, at every single one of these auctions, there was one more thing that had to be handled. The people who wanted to bid more. Imagine it is your bank. You have lent the government money, and you are holding the shares of a nickel combine as security. Now you are told to organize the auction of that security, and you are allowed to bid in it. You do not need to break a single rule. You just need to write them. So you set a deposit. Every bidder must put up cash in a specific form, by a specific hour, with a guarantee from an institution of a specific size. Then you wait to see who cannot do it. This is not a thought experiment. At the Norilsk nickel auction, a subsidiary of the bank Rossiyski Credit came in with a reported offer of $355 million, more than double the winning bid. It was barred on a technicality about the capital backing its guarantee. The bank threatened to sue. The press covered the dispute in detail at the time. The stake went for 170.1. At the Yukos auction 3 weeks later, a rival consortium representing Alpha Bank, Income Bank, and Rossiyski Credit was excluded because part of its $350 million deposit had been placed in government treasury bills, and the commission ruled that form of deposit unacceptable. At Surgut, the state oil company Rosneft was kept out on accreditation paperwork. There is one more allegation attached to that auction, that the local airport was closed on the day to keep outside bidders from arriving. Treisman reports it, but flags it as an allegation, and so do I. Here is what the pattern means. Somebody was willing to pay the state twice as much for Norilsk nickel. The state did not get it, and no rule was broken to make that happen. Now, the money is where this stops being a story about a dozen rich men and becomes a story about a country. This is Russian output, measured in constant dollars by the World Bank for 1989. In 1989, the Russian economy produces about $1.2 trillion of goods and services. By 1998, it produces 667 billion. That is a fall of 44% in 9 years, with no war on Russian soil and no natural disaster. Nothing in a peacetime industrial economy is supposed to do that. Against that collapse, put the $800 million the Loans for Shares program raised. In 1995, Russian output was about $720 billion. So the entire program, every lot, every auction, the nickel and the oil and the steel, brought in about 0.1% of what the country produced that year. It is a rounding error. The state did not solve its budget problem with this money. It could not have, which means the money was never the point, and once you see that, the whole thing reads differently. And if you want the clearest single illustration of how seriously the sale itself was taken, go back to Surgutneftegas. Roughly 40% of one of the largest oil producers in Russia, and the buyer is the pension fund of the company being sold. The company purchases itself, using the retirement savings of the people who work there, and management continues exactly as before. No outsider ever arrives. That is not a privatization. That is a company using a state auction to lock its own door from the inside. February 1996. Davos, Switzerland. The Russian businessmen who now own the country's oil and metals are watching the communist candidate, Gennady Zhuganov, work a room full of Western investors like a man measuring the drapes. Back home, President Yeltsin's numbers are catastrophic. Depending on which pollster you take and how the question is asked, his support in January and February of that year is somewhere between 3 and 8%. Every credible poll agrees it is a single digit. If Zhuganov wins in June, the auctions of the previous December are worth nothing. Every one of those companies goes straight back to the state, and the men holding them may go somewhere worse. So at Davos, they make an arrangement. It has a name now, the Davos Pact. There is no signed document because that is not how it worked. They agree to put their money, and more importantly their television stations and their newspapers, behind a president polling in the single digits. 16th of June, first round. Yeltsin takes 35.28%. Zhuganov takes 32.03%. 3rd of July, runoff. Yeltsin 53.82%. Zhuganov 40.31%. From single digits in February to a majority in July. And then, at the end of October 1996, Boris Berezovsky sits down with the Financial Times and explains the transaction in the first person. Quote, "We hired Anatoly Chubais. We invested huge amounts of money in the election campaign. We secured Yeltsin's election victory. Now we have the right to assume posts in the government and enjoy the fruits of our victory." End quote. And then he names them. Himself, Potanin, Guzinski, Khodorkovsky, Avin Friedman, Smolensky, 7 men who by his own account controlled about 50% of the Russian economy. Nobody leaked that. He said to a newspaper, on the record, with his name on it. And here is the detail that tells you how normal all of this felt at the time. Back in November 1995, at a press conference, the first deputy chairman of Minitep had already described the bank organizing the auction it intended to win as a classic conflict of interest. Out loud, to reporters. And the auction went ahead as scheduled. The mistake in this story is not made by the man who designed the scheme. The scheme worked. The mistake is made by the man who described it. Because up to October 1996, Loans for Shares is a procedure. Decrees, deposits, commissions, guarantees, the language of paperwork, and paperwork is boring, and boring is safe. The moment Berezovsky counts 7 men and 1/2 a national economy into a reporter's tape recorder, it stops being a procedure and becomes a claim on the record that a small group bought a government and expects to be paid in ministries. That sentence outlives every one of the auctions. It is quoted back at those men for 30 years. It is quoted in this video. Meanwhile, the actual bill for the 1990s is being paid by people whose names appear in no auction document at all. This is male life expectancy in Russia from the World Bank. In 1990, a Russian man could expect to live 63.7 years. By 1994, 57.55, 6.2 years gone in 4 years. Not from an epidemic and not from a war. That is one of the fastest peacetime collapses in life expectancy ever recorded in an industrial country, and it happens while the collateral auctions are being planned. 2 ledgers, same country, same decade. On one, 12 lots and $800 million. On the other, 6 years off the life of the average man. 25th of October, 2003. A private jet is on the ground at a Siberian airport, refueling before dawn. Armed agents board it. They take Mikhail Khodorkovsky, the man whose bank created the company that won the Yukos auction, and by then the richest man in Russia, off his own plane in handcuffs. Here is the reversal, and it is the whole point of the episode. He is not arrested for the auction. Nobody is ever charged over loans for shares. He is charged with fraud and tax evasion. In 2005, he is sentenced to 9 years, reduced on appeal to 8. In December 2010, a second trial adds more time. Then, on the 20th of December 2013, President Putin pardons him, and he is on a plane to Berlin the same day. 10 years, near enough for tax. 0 years for anybody for the sale of the state's industrial core to the men who ran the sale. And that is not a loophole or a technicality. It is the correct legal result. The auctions complied with a decree signed by the president, published in the state register, executed by a commission, and reported in the newspapers while they were happening. If you go looking for the crime in this story, you will not find one, and the absence is the story. What happened in 1995 was not theft. It was policy. And now the part that comes after the ending, because the biggest number in this story is not $800 million, and it is not $355 million either. This is Russian output per person in constant dollars from 1989. $8,106 per person in 1989. $4,516 by 1998. And then look where the line finally gets back above where it started. 2007. 18 years. An entire working life for someone who was 30 when the auctions were held. Male life expectancy takes even longer. It does not return to its 1990 level until 2011. 21 years to get back to the starting line. Now the 3 men. Boris Berezovsky, who explained the arrangement to the Financial Times, spent his last decade in exile in England and was found dead at his house in Berkshire on the 23rd of March, 2013. The post-mortem was consistent with hanging. The inquest a year later returned an open verdict, meaning the coroner could not conclude how he died. Mikhail Khodorkovsky lives abroad, roughly 10 years of his life spent in Russian prisons. And Vladimir Potanin, the banker who walked into that cabinet meeting on the 30th of March, 1995, is still the president of Norilsk Nickel. Forbes puts his fortune at $29.7 billion. Bloomberg, counting differently, puts it at $25.1 billion as of July of this year. Either number is more than 30 times what his bank paid the Russian state for the company he still runs. So the 2 questions, the mechanical one, is answered. A government sells its best companies to the men running the sale by writing a decree that lets the creditor auction his own collateral, and then letting him set the terms of entry. Deposit rules, guarantee requirements, accreditation paperwork. Every rival who was kept out on a form, not on a bribe. And the second question, the one left open at the start. Why did the men running the country want to lose those companies? Because they were not selling assets. They were buying a coalition. In the autumn of 1995, the Russian government was 6 months away from an election. It was polling in the single digits to lose against a communist who would have reversed everything the previous 4 years had done. The state had no money to fight that election with. What it had was oil, nickel, and steel. It converted them into the loyalty, the television stations, and the campaign spending of about 7 men, and in July 1996 it won. That is what the $800 million was. It was never a price. It was a receipt. And this is why the shape of it should feel familiar. even if you have never thought about Russia for a day in your life. Nothing in this story required a conspiracy. It required a state that was desperate and short of time, a small group of people who had cash when nobody else did, and a set of rules written by the party that stood to gain from them. There was no secret meeting because there did not have to be. Everything was published. The decree is online right now. The auction results were in the newspapers the following morning. One of the beneficiaries described the whole arrangement to a British newspaper by name, and nothing happened to him for saying it. The Russian economy took 18 years to get back to where it was per person, and the men who ran those auctions are on the billionaire list today. Nobody was ever charged because there was nothing to charge. That is what makes it worth 20 minutes of your time. Not that somebody broke the law, but that nobody had to. So here's the question I would actually like answered, and I do not think it has one clean answer. The auctions were legal and the loans were real. If you had to hold someone responsible for what happened in December 1995, who is it? The men who wrote the rules, or the men who simply used them?